You also have Samvardhan Motherson, and even defense names like Mazicon Talk has slipped lower in trade. Let's welcome our guest on board, Mr. Kranthi Bathini, the Director of Research at Wealth Mill Securities, now joins in to share with us his views on the markets. Warm welcome to you, Mr. Bathini, and thank you so much for taking the time out. Well, first up, how do you see this reaction of 200 points cut coming in on the Nifty after those 6 days of a winning run? Is it just profit booking? Is there more to it, sir?
Yes, actually, we can conceive this as a profit booking. Definitely, Indian markets, what we are seeing the patterns at this point of time is it's a buy on dips and sell on rally kind of market. But invariably, Sakshi, as and when market comes to the range of 25,000 level of Nifty, what we are
Recording
witnessing
stopped.
is because of various reasons, we are witnessing some kind of a profit booking on Indian markets. That's what we are witnessing at this point of time. But if the Nifty could able to hold on to this range, we can see there can be a pullback rally in the medium to short term for the market. Uh, Definitely, there are global concerns at this point of time, and but the domestic cues have been quite favorable at this point of time. So definitely, for a long term, any dip on Indian market still it can be warranted by. But this is not the market, actually, where we can uh, buy, sit back and relax because of the choppy mood and also the nature of the geopolitical environment, what we are going through. It's a market that's testing the patience of every investor at this point of time. So if there are any kind of a sudden spot in the stocks, what anyone picks up, um, there is a reason to book some profits at the reason to book some profit from the table also at this point of time. I don't know how much time it will take, but this is the market which is very choppy at this point of time. Till the time, okay, the global geopolitical issues, the global dust settle down, we can see this kind of a choppy ride in the market in the medium to short term.
Okay, got that. Mr. Bathini, let's try to talk about some of the stocks and sectors that are still holding up in trade despite this weakness overall on the index. We're seeing some, auto names that are still hovering higher, M&M, Maruti Suzuki for that matter. Even some auto ancillary names are actually buzzing in trade. They have been the space that has been in focus all through this week because of the GST rationalization news coming in. How are you looking at the auto space for now, sir?
I'm quite neutral with respect to the auto space is concerned, actually. Where, of course, definitely the GST rationalization is a positive move for the auto space is concerned. But where I'm also concerned is the rate cycle that started by RBI that's going to get continued. That gives more booster to the auto sales. Of course, GST is one of the most favorable thing for the automakers. The reason is when you buy any automobile, the kind of taxes the various government institutions get benefited and paid is highest in the world in India. So that is the reason some kind of a GST rationalization is advantage for the automakers in the medium to long term. I'm more focused at this point of time. The OEMs, we have witnessed when the GST rationalization news that came up, we have witnessed strong rallies, names like Maruti and Hyundai Motors and Mahindra also. It had a strong rallies in the recent past this week, especially. So the OEMs, what we are focusing at this point of time is Hyundai Motors and Mahindra and Mahindra. These are the favorite picks to us in the medium to long term.
Okay, got that. Let's take some other questions too. We have this question that we wanted to ask you with respect to the other sectors as well. GST rationalization is expected to, give a boost to a lot of domestic industries at large. FMCG, consumer, cement, there's a lot of expectation there as well. Which are the other sectors that you believe are likely to benefit from lower tax rates, sir?
The one thing is foremost is the consumption. Okay, that's where what we witnessed is the last 1 year and all some kind of a consolidation in the consumption theme. GST rationalization will help the boost of consumption, both rural as well as urban. That's where we are witnessing some kind of a pullback rallies like um, uh, Unilevers and the Colgates of the world. They're just pulling back at this point of time. Investors with low risk appetite also one can pick up these stocks for a medium to long term perspective. FMCG at this point of time, the risk reward is in favor of rewards at this point of time. Investors with low risk appetite also one can look at FMCG at this point of time, Sakshi. But
Oh,
definitely, Sakshi, it's going to be a uh, completely stock picker market. So one need to have a stock picking theme at this point of time, rather than going through a basket of stocks at this time.
okay. What about the pharma space? What is leading to this up move since last 2 days within the pharma packs, you believe? And how is the sector poised to move forward from here?
Lingering impact of all these tariff announcements that has been creating some kind of a negative impact with respect to pharma stocks are concerned in the medium to short term. Uh, we need to wait and watch for a quarter just to get a clarity with respect to pharma as a sector is concerned. At this point of time, it is we are looking for the companies who have a more about domestic exposure rather than the export-oriented revenue at this point of time. Very stock specific, and we are quite neutral in medium to short term with respect to pharma as a sector is concerned.
Okay, got that. Let me ask you on a few stocks now, specifically that are in the buzz. F&O space led by Vodafone Idea. What do you think is behind this momentum that is again being seen on this stock at this point in time? Are you looking at it, or do you think it's still, best to stay away, looking at all the parameters?
As per the business parameters are concerned, Sakshi, we have not witnessed any kind of a large, substantial improvement in terms of their key revenue parameters are concerned. Still, they're losing the subscriber base. Increasing the ARPU can be one positive for Vodafone, but still the lingering impact of the company in terms of its business survival still is a greater question for Vodafone Idea. I can perceive this as a dark horse. Investors with high risk appetite only one can look at these kind of companies. Otherwise, there are some beautiful companies, strong business models are available within this market space.
Okay, got that. For our viewers to know that, it went up 10%, logging in sharpest intraday rally in last 4 months that we have actually seen. There are some reports that are flourishing, which are of course unconfirmed, that have proposed that multiple relief options, including a further 2-year pause on paying the statutory dues, is under the moratorium due to the PMO, is being considered at this point in time. Remember, like I said, these are unconfirmed reports that are flashing in, and that has probably been one of the key reasons why the stock has moved up. Even the trading volumes on the counter jumped by threefold, with a combined 1338 million equity shares changing hands as well. So keep an eye out in Vodafone Idea in the interim. But you've already heard our guests' views on the same as well. Let me also talk to you about some of the other sectors and stocks as well. One more sector that I wanted to discuss with you is the capital market sector, sir. This is with respect to what has happened yesterday. We've got indications from SEBI chief, Mr. Tuhin Kanta Pandey, who has said that there is a contemplation at SEBI going on with respect to increasing the tenures of the weekly derivatives contracts, which they believe have been hampering a lot of retail investors. Even the F&O, SEBI has already come out with a paper that suggests that 93% people have lost money in F&O trades, and therefore SEBI is contemplating a lot of measures to protect the end consumer or the retail investor there. Now, we are not yet sure what will be the timelines. That's what Mr. Tuhin Kanta Pandey has indicated as of yesterday to the media. where he suggests that a consultation paper is underway, and once that comes in, we will be able to understand what is the thought process on that. But as a repercussion of this, we've already seen some capital markets related stocks feel the pressure and pinch. Names like BSE, MCX, Angel One, they all fell yesterday because of some kind of a fear of losing of volumes coming in maybe. How would you look at capital market story as of now?
Sakshi, any consolidation in the capital market story or any kind of a sharp decline or a consolidation can be a good buying opportunity for these stocks. Of course, these stocks are not cheap at this point of time. They're fully priced in at this point of time. But the derivatives volumes have been always volatile for these capital market stories because they comes up with a lot of regulatory reasons. But the prime utmost priority of the regulator, SEBI, is protect the interest of the retail investor. So the capital market oriented themes are bound to do well on a longer term perspective, but these kind of aberrations do create some kind of a volatility. Of course, it reached a point where we also get confused how many expiries every day we are facing. Sometimes as being a news anchor also, business news anchor also, you will also get confused what kind of expiry we are facing. So such kind of a heightened activity we witnessed in the capital market theme in the earlier. So and the SEBI data shows majority of the investors have been incurring the loss. So to protect the investor interest, SEBI has been bringing these kind of measures. Definitely, it's going to have some kind of impact in the medium to short term of the volumes of of these companies, and it's going to have some kind of a medium to short term impact. But as a theme, as a greater theme of India theme is concerned, still it's a growing theme. So there can be strong opportunities in the capital market as theme is concerned, and also the MIS market infrastructure institutions. We have the NSDL, the new one more depository that got listed, and there are the whole theme is going with respect to the capital market stocks are concerned. So on a longer term perspective, I'm quite sanguine with respect to these companies, but these short term impacts can be impacting the stocks in the medium to short term.
Okay, fair point. Another key aspect that the markets are clearly keeping one keen eye out on is the recent passage of the online gaming bill in the parliament as well, sir. That led to a lot of knee-jerk reactions being seen on names like Nazara, Delta, on Mobile Global. Today, there is a development that Nazara Technologies has indicated to the stock exchanges that their associated company, Moonshine Technologies, that is Pokerbazi, which is clearly linked into the money-related games, that has actually seized any real money online gaming operations. This is as a reaction to what the bill has been passed, which is which is seeking to ban or put a ban on complete operations of any real money online gaming app or betting app so far. And there was a huge anticipation that how will Nazara Tech be impacted because of its exposure to Pokerbazi. Now Nazara Tech, we all know, holds about a 46% stake, and the move, they have said, is coming in as a matter of abundant caution and in due respect of the centre's mandate as well. The company has said they will evaluate the future course of action following the enactment of the promotion and regulation of the online gaming bill, which the parliament has passed, and we'll now have to see what is the way forward. Even today, Nazara is down by about 3.8 odd percent. What's your sense on this entire space, for those who've been holding on the stocks? It's a difficult decision to take now.
Yes, actually, we have been witnessing from the past couple of years. We come across the news about this online gaming and all heightened activity that took place, and also look about the astronomical kind of revenues and taxes, and it is a completely like look like the controversial subject earlier, but government want to make this unorganized thing into a complete regulations. That's what the government try to brought this law, and also now the act is there, so there is a complete legal framework is there. what is good, what is not good. That's what the government has brought this law. Now, there is a clear framework. There are do's, there are do nots. So, the organized sector can work within the work of what according to the law, which can be do's, which can be don'ts. So, one can focus the companies which are going to focus on the do's. They are going to flourish because there is a clear cut law. Earlier, it was a gray area, and who don't know what is skilled game, what is non-skilled game. Now, at least this act can bring some kind of a clarity of the do's are concerned. So the listed space can look at the do's, and what we witnessed earlier, some kind of a unicorns also came up in this space. Thank God they are not listed. So the retail investors' interest get protected. So while coming to the listed space is concerned, they have a clarity right now which angle they need to work, which areas to work. So the existing investors can hold on and see these are technology driven companies, the Najara and all. Okay, of course, they do have some kind of, as you mentioned, some kind of exposures. So at this point of time, they turn towards the legal framework over a period of time, and this brings the serious players and organized players to be in this industry over a period of time. Always regulatory measures are welcoming move. Otherwise, the small and many of the people are losing the money. That's the reason this act has been enacted in the market in the parliament.
Okay, fair point. Let me just also dive a little deeper and find out any other sectors that we can get, your attention to. Defense names, let's find out, sir, what's your fresh view there? We've seen today Mazagon Dock has faced some pressure. Brokerage houses are, looking at continued pressure there. But Idea Forge Technologies has moved up about 7.5% in trade. We've been also looking at Apollo Microsystems about 13% higher. PTC Industries is another one that you marked out on our channel many times for our viewers as well. That's also on a move on the higher end. How are you looking at fresh opportunities within the defense space, sir?
Yes, actually, I'm quite optimistic and sanguine with respect to the defense as a space is concerned. Of course, we tend to come across the valuation is the theme here and there. But whenever there is a spot in the valuation, we also witness some kind of a moderation because too much money sometimes chases few stocks. That's where Mazagon Dockyard has been in a consolidation phase. But these companies, these business models are quite strong. They have a strong order book over a period of time. So any dip in these defense stocks can be a wonderful, good opportunity for the medium to longer term investors. There will be some kind of a spurt. So whenever there is a spurt kind of a situation, okay, one can book some profit from the table. But the long term theme for defense and aerospace, that is also one of the budding space within a part of defense theme is concerned. This is the theme that is going to last for some more years in terms of the business is concerned. Of course, we whenever these new themes comes, some kind of valuation concerns do comes. That's where the stocks picking skills come into the picture for any of the investor. Defense, I'm quite sanguine with respect to in a very stock specific mode.
Very stock specific modes there. Okay, we'll keep an eye out on that too. Along with some of the names that I took, even BL is among the top movers on the Nifty, so keep an eye out on that as well. Let's try and understand on the large cap space, especially with the heavy weighted sectors like IT, banks for instance. What's your fresh approach here?
Sakshi, I have very contrarian with respect to IT is concerned.
Okay.
Um, of course, in the medium to short term, definitely don't expect any kind of a blockbuster kind of a returns are a double digit return from IT. But if the investors are a long term in nature, if the investors have a 2 to 3 years horizon, definitely Indian IT work looks very attractive to me on a medium to longer term basis. So I'll be the net buyer in the large cap IT stocks are concerned for a medium to long term perspective. Definitely, short term, it's a avoid. But given the kind of strong business models the Indian IT sector offers, these companies have witnessed like the TMT bubble, technology, media, telecom in 2000. We witnessed these companies went through the GFS, global financial crisis, great financial crisis in 2008, and we witnessed recently COVID also. But the current the trend that's taking place in US have a impact on these companies in the medium to short term. But on a long term, these companies have the adaptable to the change that's taking place in the service and technology sector. But what Indian IT companies, majority of these companies have missed is they pursued more about the service industry rather than changing their faces as a technology companies. That's where the Indian IT companies have been struggling in the medium to short term. But definitely they have the capability to take the advantage of the changing new domains in the technology space is concerned. That's what taking time at this point of time. On a contrarian view, one can buy IT companies for a longer term perspective. Definitely in the medium to short term, one can avoid IT in the short term perspective.
Okay. Towards the end, Mr. Bathini, help us understand your outlook for the next week. A lot of our viewers will be interested in finding out what their strategy should be. Next week is going to be of extreme importance again, because remember, today in the end of the day is where we will get to see what US Federal Reserve Chair Jerome Powell really remarks as far as his Jackson Hole Symposium meeting is concerned. That could definitely shape expectations for future monetary policy. So that's going to be of extreme importance. Next week, viewers, is going to be seeing 27th August also come by, and that's the date at which there is so far at least an anticipation that there could be 25% of an additional tariff, as has been already indicated by the US, could be imposed on India. So there will be an overhang of that, and because we'll be just about 2 days before that is what you will have as market days. But remember, 27th is also going to be Ganesh Chaturthi, so it's going to be a market holiday there. So we have a truncated week as well. So a lot of factors that will be at play. So it's going to be of extreme importance to understand the right strategy. So what's your outlook for the markets for the next week, and what strategy would you devise for our viewers, sir?
Yes, actually, markets can be in a consolidation phase. One thing we need to observe. The other hand, today the Shanghai index have trading at an all-time high, whereas the
Okay.
India is where Nifty is below 25,000 level. So where the tariff story started with China, but the entire the narrative shifted towards India at this point of time. In fact, China has been one of the largest buyer of Russian oil, but that index is trading at all-time high, and we are at a choppy waters at this point of time. That's what we are witnessing on Indian markets. I'm looking forward for the markets to sustain about the 25,000 level of Nifty, Sakshi. If market could able to come back again, we can see some kind of positivity. The Indian domestic macros are quite strong, but the Nifty is stuck in this range. If the Nifty could able to weigh through the 25,000 level, we can see some kind of a positive optimism. Rebound buying is going to come on Indian markets. So right now we are going to see a range bound trade in the coming week, but immediately 25,000 level of Nifty is important. It's a sentimental level and also strong support level for the market in the medium to short term.
Fair point. Thank you so much, Mr. Bathini, for sharing that view with us, and of
Thank you,
course, a
Sakshi.
strategy
Always my
for all our
pleasure.
viewers. Pleasure to have you with us. Let's start winding up the markets then, viewers. 220 points of a cut is what we have. 24,865 is the level at which we are probably going to end the day with. A lot of sectors that succumbed to pressure today included metals, banking space entirely, including the financial services, FMCG, realty, IT, oil and gas, infra, even the broader markets, and slum losses.